now we're going to continue with the statement of cash flows with the investing and financing sections. So make sure you've watched the video titled LO2 operating first. You want to do the operating section before you do the investing and financing section. So remember, the investing section has to do with changes in long-term assets. So when I look at my balance sheet, I see, and I'm given some additional information, that I see that plant assets increased. Okay, so that implies that I bought some plant assets. But I know that I also sold some plant assets because there's a gain in the income statement. So I need some more information to figure this out. So we're told that we purchased $310,000 of plant assets. They were purchased with cash. And that $10,000 gain resulted because I sold some plant assets for $50,000. Now, the plant assets had a cost of $55 and accumulated depreciation of $15, which means they had a book value of $40. Since they had a book value of $40, the $55,000 cost minus the $15,000 accumulated depreciation. Since they had a book value of $40 and I sold them for $50,000, those are the proceeds, then that's where I get the $10,000 gain that I see reported in the income statement. So oftentimes it's helpful to look at some T accounts. So our plant assets last year were $252. This year they're $507. I know that I sold an asset that had a historical cost of $55,000. So that's a credit of $55. And I purchased assets for $310. So that's a debit of $310. So that equation balances out. That T account works out. I get an ending balance of $507. When I look at accumulated depreciation, it was 42 last year, it's 47 this year. Now, I know that I had depreciation expense of 20,000. Remember, depreciation expense is a debit to depreciation expense and a credit to accumulated depreciation. So I know that I credited accumulated depreciation for 20,000. But when I sold that plant asset, remember, I have to take the accumulated depreciation off. So I debited accumulated depreciation for 15. So that's how the account works out that I have an ending balance of 47. So to do the investing section, it's pretty easy. I know that I paid cash of $310, so I'm going to list cash at $310 and put it in parentheses to subtract it. And then I sold assets for $50, so that's a positive $50,000 because that's $50,000 of cash that I received. So we don't have to do any of this chart or anything like that. It's just if I spent money, I bought the assets, I spent money, it's a negative number. If I got the money in, it's a positive number. But I want to point out that this $50,000 includes that $10,000 gain. Okay, so you don't have to do anything special. It's already included in there. Now for the financing section, we're going to see that notes payable went up. But we also know that we retired some notes, which just means that you paid them off. I issued some common stock and I bought some treasury stock and I paid some dividends. So we've got a lot going on in the financing section here. So first of all, let's look at the notes payable account. It was $80,000 last year, it's $160 this year. We were told that we issued $90,000 of new notes. So that's a credit to notes payable. That's money that we borrowed. When we retired notes, that just means we paid it off. So we debited notes payable for that credited cash. So that's how we wound up with the 160 ending balance in notes payable. So the first thing I'm going to do is I'm going to say I issued notes. That means I got money. I debited cash. I credited notes payable. So that's a positive 90,000. And I paid cash to retire the notes. So that's a negative 10,000. So now we know that we issued common stock and we purchased treasury stock. We issued common stock of $120,000, so that's $120,000 of cash that I received. So that would be a positive 120. And since I paid $20,000 to purchase treasury stock, that will be a negative $20,000. So here we can see we got $120,000 for issuing the common stock. We spent $20,000 for buying the treasury stock. Now, let's look at dividends. We know we paid dividends, but we don't know how much we paid in dividends. In order to figure out how much we paid in dividends, we need to look at the retained earnings account. So we know that the retained earnings account had an $80,000 balance last year. Only two things affect retained earnings: net income and dividends. So we know that net income was $40,000. We got that off the income statement. 80 plus 40,000 should be 120. So if we had not paid dividends, the ending balance in retained earnings should be 120, but it's not, it's 110. So that tells us, since it's not 120, it's 110, that we had to have paid dividends of $10,000. So since we paid dividends, that will be treated as a negative number in the financing section. So in total, our cash provided by financing is a positive 170. Now, if we combine this with the operating activities, which were a positive 70, we subtract out the cash from investing, which was a negative 260, plus the cash from financing of a positive 170, we see that cash decreased by $20,000, which is exactly what our balance sheet says. So we'll add our beginning cash balance, or last year's balance of 42, which gives us the 22,000 ending balance, which is exactly what the balance sheet says it's supposed to be. So that all works out. So now we can see the entire section, and hopefully your statement of cash flows that you wrote down on that last page looks very similar to this one. So we have our company heading at the top, our three-line heading: company name, name of the statement, and the date. Notice it's the year end, December 31. That's the same as the income statement that we looked at. We started with net income. We had all of our adjustments to operating activities. That gives us our cash from operating. Then we had our investing, our financing, and then we formalized it all up at the end. So I hope your statement of cash flows looks like this. I hope you've enjoyed this class. I hope you've learned a lot, and I hope to meet you and see you again, and hope you'll take another one of our classes, and good luck in the rest of your accounting studies.